But this is sort of in a case study. It's sort of what we provide. So I want to kind of give you a case study of what it looks like. Kind of course, it's in a more visual presentation. But again, going through the three areas. So this is a roofing contractor that came in July of last year. They do about $3 million. Now, folks, it's not the revenue that we're looking for qualification. So I just want to be clear on that. It's a tax liability. I've seen many people that have 20 million in revenue. When it gets down to their profit, it's like 100,000, right? So that means they're writing off everything under the sun. Very aggressive. I don't know if they're going to do that this year with AI moving forward with the IRS, but listen, that's not my place to say anything yet, but it's tax liability. So again, we want to look at tax liability. What did they pay the previous year based on the profit they get? So very easy question. They can find it on line 24 of their 1040 form. And you could look for yours as well, right? Everybody here on the 1040 form last year, just look at line 24 and you'll see what you paid in total tax liability. Anyway, again, what we do with the tax analysis, right? We assess your concerns and challenges. We want to propose them to you. We want to notify you. So this particular contractor didn't really know about an employee reimbursement plan. They never created it. They just weren't aware of it. And their accounting team wasn't either. Salary. This is the report that we give, complimentary, right? We noticed that most business owners were saving them that or overpaying themselves by 25,000, right? 25,000 too much. Plus health insurance. They never optimized health insurance for tax purposes. And of course, the savings that they had left over at the end of everything, they never optimized that for tax purposes as well. So again, when you look at the metrics, 3.1 million, but they see again, as an example here. Now in the construction industry, if you're getting profit margins around 10 to 12%, you're in the norm, right? You're doing something amazing. Anything higher than that, well, there's something's not right. But 10 to 12% is the average norm from construction industry, right, for profit. So he had a tax liability of 107,000. We proposed 4 strategies, right, saved them $32,000, right? And so again, instead of paying 107 to the IRS, they were going to pay 75,000. But what did we recommend, right? And so we kind of come down here. And again, I told you, our strategies are identified by the IRC codes themselves, right? So we provided 4 strategies here. This one here is a reimbursement plan, again, that the company did not know or wasn't aware of. So once we implemented that and put it in place, to save them almost $5,000 in tax savings. The plan here was overpaying themselves compensation. Again, just $25,000 higher than what your reasonable compensation wage should be. Save them $5,500 in tax savings, right? Reducing their salaries to the appropriate level based on their state, city, zip code, and industry that they're in. And by the way, you're all business owners here as reps, right? 1099s, you're your own business owners. You're wearing multiple hats. So you should pay yourself as if you're wearing multiple hats. You're the CEO, you're the HR person, you're the finance, account, and bookkeeping. You're doing advertising, marketing, sales. You're wearing all these hats. You should respectably be paid by all these different departments that you're associated with, right? One person doing them all. Now, you may have other people if you're large enough and you'll have staff, but you're still looking at the numbers. You're still looking at your revenues, what your commissions are, what your tax expenses are, right? You should be paying yourself accordingly and appropriately. Again, accountants don't know how to do this section here because they just say, you know what, pay yourself way more than what someone in your sales position would do, and then avoids the IRS. Well, you're paying more in tax unnecessary, right? This one here is a reimbursement from a health insurance plan, right? According to the IRC code. Not a lot, but still $2,700 in tax savings. That's less of a check cut to the IRS. And this one down here is an investment related with special provisions in the IRC code to reduce your tax liability. This saved them $19,000 in tax savings. So collectively, 4 strategies, $32,000. We recommended 9 strategies and reduced their tax liability by $105,000. So that's 4 for 32. We recommended 5 additional, and then they cut a check to the IRS for $2K. And that's kind of it in a nutshell as far as the case study goes with that.